All right, everybody, it is still April the 8th, and we're at about 8:30 p.m. here in Toronto, but I definitely wanted to talk about today's market. I know there's been a lot of news already, China tariffs, etc., but let's really dive in a little bit deeper and take a look at some of the indicators from earlier today that we had mentioned that definitely pointed to potentially this volatile switch in the market. And first, let's dive into this market, taking a look at the Dow, where we saw an insane, probably the most volatile day I have ever seen, or at least a swing day, going from well over 1,000 points in the green, finishing at 320 in the red, the 500 finishing about 80 points in the red, NASDAQ finishing down about 335, Toronto finishing down just over 350. Very, very aggressive moves from a very positive start to the day, ending very much in the red. A lot of it does have to come following the announcement of retaliatory tariffs from China, and then again retaliatory back from the US. Now, if we take a look at some of our key indicators this morning, or from this morning, our 10-year yield, which we had talked about, and I had warned that if we continue to see a spike, that could be a very strong indicator that the markets are starting to go out of control. And that's what we got today. We saw a 3% increase in the yield, which was very dramatic. Hopefully tomorrow we don't see a continued push higher. If we see another spike in that 10-year yield, that could be a very strong indicator to something that could be quite ugly coming down the road. Now, if we take a look at the US dollar over throughout the day, or at least where we are today, right now, the US dollar is currently down about 31 basis points. Now, this is important to watch as well, because if we see money moving to safety, ideally the US dollar should be a point where we're going to see some positivity, but instead we are still seeing a downtrend, and that is concerning because currently sitting below 103, actually sitting at about below 102 and a half. Very concerning. Our key number should be somewhere around 104, but this continued downtrending and erosion of the US dollar is very problematic and something we definitely need to take a look at. The other thing I want to take a look at here, just commodities real quick, gold and silver. Gold and silver both ended up finishing in the red on the day as well. I'd love to see gold rebound, and so far in overnight trading, it is moving a little bit higher. Again, something positive because we know that that is a safe haven asset. But overall, this deliberate attempt to erode the US dollar and help push rates high, or rates lower, at least from the Fed, all deliberate, all hyperinflationary, all eventually going to destroy